Welcome to a deep dive, you guys, into the world of AML CFT here in Luxembourg.
AML CFT.
We're going to be focusing in on
Right.
asset due diligence obligations
Okay.
based on the latest FAQ document
Yes.
from the CSSF, the financial regulator here.
Uh-huh.
Think of this
All right.
as your shortcut to understanding
Right.
what professionals are looking at when they assess financial risks.
Exactly. Yeah. And we're working with the December 13th, 2024 version of the document. So
Okay.
everything we discuss
Perfect.
is right up to date.
Now, this FAQ really centers around
Okay.
Article 34.2
Yeah.
of CSSF Regulation 1202.
Mm-hmm.
To put it simply, it means financial professionals
Right.
can't just handle assets blindly.
Yeah.
They need to actively analyze the potential money laundering or terrorist financing
Uh-huh.
risks involved
Right.
and take appropriate due diligence measures.
Think of it this way. Every time money changes hands,
Okay.
there's a risk assessment
Oh,
happening in the background. It's how we ensure the financial system
makes sense.
isn't being used for illegal activities.
That's a lot of responsibility.
Yeah.
The FAQ also distinguishes between listed and unlisted assets.
Right.
Could you break that down for us?
Sure.
What's the significance of that
Yeah.
for someone trying to get a handle on AML CFT?
So it comes down to transparency.
Right.
Listed assets, meaning securities traded on regulated markets,
Uh-huh.
tend to have more disclosures and controls in place.
Okay.
That inherent transparency
Right.
makes them generally less risky from an AML-CFT perspective.
Okay.
In fact, the CSSF considers it sufficient to simply demonstrate that the securities are listed on a regulated market.
So if I'm understanding this correctly,
Yeah.
if a financial professional in Luxembourg
Right.
can prove a security is listed,
Yeah,
they basically checked a big box for their due diligence obligations.
that's right.
Okay.
But it's important to remember, even with listed assets, risk isn't completely absent.
So it's not like a guarantee.
Yeah.
It's more like a starting point. That's right.
Okay, that makes sense. And in Section 2.3 of the FAQ, they emphasize that this risk assessment isn't a one-time thing.
Right.
They talk about needing to adapt if things change.
Uh-huh.
What exactly does that mean in practical terms?
Well, that's where the risk-based approach comes into play.
Okay.
It means financial professionals need to be constantly reevaluating. Reevaluating.
Yeah.
Let's say a company's ownership suddenly changes,
Mm-hmm.
or there are new sanctions imposed against a specific country.
Uh-huh.
Those events could significantly alter
Interesting.
the risk level of an investment.
So it's more about being dynamic
Yeah.
and responsive
Yeah.
than just following a static checklist.
Precisely. And the FAQ gets very specific
Okay.
about situations requiring enhanced due diligence.
Mm-hmm.
For instance, dealing with unlisted assets which don't have the same level of transparency
Right.
as listed ones
Yeah.
will almost always
like what?
require a more thorough assessment.
Makes sense in those cases.
What are some of the red flags a financial professional might be looking for?
Right.
Let's say they're dealing with an unlisted company. What would set off alarm bells?
Well, imagine you're a financial detective.
Okay.
You're piecing together a puzzle
Right.
to get a clear picture
Right.
of the company
Yeah.
and its activities.
Okay.
Some key pieces you'd be looking at are the company's business model,
Okay.
its ownership structure,
Uh-huh.
and its financial history.
So if a company's business model is overly complicated,
Yeah.
or if their ownership is obscured through a web of shell companies,
Exactly.
that would be a red flag.
And any unusual
Okay.
or complex transactions, especially those involving high-risk countries or industries,
Uh-huh.
would warrant further scrutiny.
Okay.
Transparency is key if a company seems hesitant to provide information
Got it.
or their answers are vague.
Yeah.
That would also raise concerns.
It sounds like a lot depends on
Yeah.
the professional's judgment and experience. How much leeway do they have in deciding how deep to dig?
Well, the FAQ really emphasizes that each professional is responsible
Oh,
for tailoring their risk assessment and due diligence
Oh.
procedures.
okay.
There's no one-size-fits-all approach.
So there's a balance to be struck then between following general guidelines
Yeah,
and applying individual judgment based on the situation.
right.
But wouldn't that lead to inconsistencies?
That's where things get really interesting and where we'll pick up in part 2. Join us as we delve deeper
Okay.
into the practical challenges professionals face in navigating these AML-CFT regulations.
We're back with part 2 of your deep dive into
AML-CFT.
asset due diligence in Luxembourg.
Okay.
In part 1, we set the stage talking about Article 34.2.
Mm-hmm.
and the distinction between listed and unlisted assets.
Right.
Now let's get into the real world.
Yeah.
Challenges for financial professionals you mentioned.
Okay.
Finding that balance between general guidelines and individual judgment.
Yeah.
What does that look like day to day?
Well, it's all about being proactive and having a questioning mindset.
Huh?
Professionals need to weave due diligence into every client interaction.
Got it.
From the initial onboarding
Okay.
to ongoing transactions. This means asking the right questions, carefully reviewing documents,
Makes sense.
and understanding the source of funds and the purpose of the investment.
So if I were a financial advisor
Right.
in Luxembourg, I wouldn't be just filling out forms.
Not at all.
Okay.
Imagine you have a client who wants to invest
Okay.
in a real estate project.
Uh,
You would need to know more than just the location and the price tag.
oh,
Where are the funds coming from?
got.
Who are the developers involved?
Yeah.
Has the project obtained all necessary permits?
Okay.
These are all crucial pieces of the puzzle.
So you're not only looking at the investment itself,
That's right.
but also at the people and entities behind it.
Precisely. And this is where professional judgment comes into play. There's no set formula for how deep to dig. The level of scrutiny will depend on the specific risks
Rixus.
associated with the client, the investment, and any red flags that emerge during the assessment.
It sounds like a balancing act, trying to be thorough without being overly suspicious of every client.
Yeah.
What are some of the trickiest
Right.
aspects of this process for professionals?
So one of the biggest challenges is handling situations where there's a gut feeling that something might be amiss,
Right.
but there isn't enough concrete evidence
Okay.
to trigger a formal report
Yeah.
to the authorities.
That sounds like a tough spot to be in. Do you have any real-world examples of what that might look like?
Let's say a client who previously only made small, regular investments
Huh?
suddenly wants to deposit a large sum of cash with no clear explanation of its origin.
Okay.
This might not be enough to warrant a report, but it definitely raises concerns and requires further investigation. The professional might need to have a conversation with the client, ask additional questions,
Okay.
and review their transaction history for any patterns that could indicate suspicious activity.
So it's about trusting your instincts, but also backing them up with evidence.
Exactly, and it highlights the importance of having strong
Right.
compliance programs within financial institutions.
Right.
These programs provide a framework
Got it.
for decision-making, offering guidance and support to professionals navigating these gray areas.
What are some key elements of a robust compliance program?
Well, a good program goes beyond just having policies on paper.
Okay.
It's about creating a culture of compliance
Right.
where everyone understands the importance of AML CFT and feels empowered to act.
Okay.
Regular training is crucial, keeping employees updated on regulations, emerging risks, and red flags.
Right.
There should also be clear procedures
Got it.
for reporting suspicious activity internally
Okay.
and escalating concerns to the appropriate level.
It sounds like communication is key, ensuring everyone's on the same page and knows what to do if they encounter
Right.
something questionable.
Absolutely. Open communication is vital, and it goes both ways.
Okay.
Management needs to be receptive to concerns raised by employees, and employees need to feel comfortable speaking up without fear of reprisal.
Okay, so we have training, clear reporting procedures,
Right.
and open communication. What else makes a compliance program truly effective?
A good program should also include mechanisms
Okay.
for monitoring and reviewing transactions.
Uh-huh.
This might involve using technology to scan for unusual patterns or anomalies, but it also requires human oversight.
Yeah.
Experienced analysts are needed to interpret data, make judgment calls, and investigate potential cases of money laundering or terrorist financing.
So it's about combining human intelligence with technology.
Exactly. Technology can be a powerful tool,
Right.
helping us analyze vast amounts of data and identify potential risks, but it's not a silver bullet. We still need human expertise to understand the nuances of each case and make informed decisions.
And this brings us to another important aspect of AML CFT, keeping up with a constantly changing landscape.
Right.
What are some of the biggest challenges financial institutions face in staying ahead of the curve?
One of the biggest challenges is the sheer volume and complexity of transactions in today's global financial system.
Right.
We're dealing with vast amounts of data flowing across borders through different institutions
Right.
and involving a wide range of financial instruments.
Got it.
This makes it difficult to track the movement of funds and identify suspicious patterns.
So it's like trying to find a needle in a haystack.
Yeah.
But the haystack is constantly growing and shifting.
That's a great analogy.
Okay.
And it's why technology is playing an increasingly important role in AML-CFT. We're now using sophisticated data analytics tools, artificial intelligence, and machine learning to help us sift through this mountain of data, identify anomalies, connect the dots between seemingly disparate transactions.
It's fascinating how technology is transforming the fight against financial crime. What are some specific examples of how these tools are being used?
Well, imagine a system that can analyze millions of transactions in real time, looking for patterns that might indicate money laundering or terrorist financing. For example, it could flag a sudden increase in transactions involving a specific account, especially if those transactions are linked to high-risk countries or individuals.
So the system is acting like a virtual detective.
Exactly.
Constantly monitoring for suspicious behavior.
And the beauty of these tools is that they can learn and adapt over time, becoming more sophisticated at identifying subtle patterns and anomalies that might escape human notice.
It sounds like technology is giving us a real edge in this fight.
Yeah.
But you mentioned earlier that human expertise is still crucial. How do these two elements work together?
It's all about collaboration. Technology provides the tools, but humans provide the context and the judgment. We need skilled analysts who can interpret the data, investigate potential cases, and make informed decisions about whether to escalate a concern to the authorities.
So it's a partnership, not a replacement.
That's right.
Humans and machines working together to protect the financial system.
Exactly, and that partnership is becoming increasingly important. As financial crime becomes more sophisticated and globalized, we're seeing criminals using new technologies and techniques to launder money and finance their activities.
Wow.
Which means we need to constantly adapt and evolve our own strategies.
This has been an incredible look at the real-world challenges of AML-CFT, but we've also talked about the importance of ethics in this field. I'm really curious to explore that further. What are some of the ethical dilemmas professionals face? We'll continue this conversation in Part 3. Welcome back to the final part of our deep dive into AML-CFT. We've covered a lot of ground.
We have.
From the nitty-gritty of regulations to the evolving challenges facing financial professionals. But as we wrap up, I think it's important to focus on something you mentioned earlier, the ethical considerations. In AML-CFT, what are some of the ethical dilemmas that professionals might encounter?
Well, one of the most common dilemmas is balancing client confidentiality with the obligation to report suspicious activity. Professionals have a duty to protect their clients' privacy.
Makes sense.
But they also have a legal and ethical responsibility to report any red flags that could indicate money laundering or terrorist financing. It's a delicate balancing act.
So how do professionals navigate that? It must be challenging to determine. When a concern crosses the line from a gut feeling to something reportable.
It is, and there's no easy answer. It often comes down to a judgment call based on the specific circumstances, the professional's experience, and their understanding of the relevant regulations.
Makes sense.
That's why it's crucial for financial institutions to provide clear guidance and support to their employees, fostering a culture where they feel comfortable, raising concerns and seeking advice.
It sounds like a strong compliance culture is really the foundation for ethical decision-making in this field.
Absolutely. A robust compliance program goes beyond just rules and regulations. It creates an environment where ethical considerations are woven into the fabric of everyday operations. It's about empowering employees to make the right decisions even when they're difficult, and knowing that they have the backing of their organization.
We've talked about how technology is playing an increasingly important role in AML-CFT. Are there any ethical considerations surrounding the use of these advanced tools?
That's a great question. The use of artificial intelligence and machine learning in AML-CFT raises important ethical questions about bias, transparency, and accountability. For example, if an algorithm is trained on data that reflects existing biases, it could potentially perpetuate those biases in its risk assessments, leading to unfair or discriminatory outcomes.
So it's not just about implementing the technology, it's about making sure it's used responsibly and ethically.
Exactly. We need to be mindful mindful of the potential pitfalls and ensure that these tools are designed and used in a way that is fair, transparent, and accountable. Human oversight is crucial, especially when it comes to interpreting the results of these algorithms and making decisions that impact individuals.
Looking ahead, what are some of the key trends and challenges you see on the horizon for AML CFT?
Well, one of the biggest trends is the increasing interconnectedness of the global financial system. As technology continues to evolve, we're seeing a rise in cross-border transactions, the use of virtual currencies, and the emergence of new financial products and services.
Interesting.
This creates new opportunities for criminals to launder money and finance their activities, making it more challenging for authorities to track and disrupt these illicit flows.
So the fight against financial crime is becoming more complex.
That's right.
And globalized.
And it underscores the importance of international cooperation. No single country or institution can tackle this problem alone. We need to work together, sharing information, coordinating our efforts, and developing common standards and regulations to close loopholes and create a more resilient global financial system.
It sounds like a collaborative effort is essential to stay ahead of the curve.
It is.
As we wrap up this deep dive, what's the most important message you'd like listeners to take away?
AML CFT is not just about compliance. It's about integrity. Yeah, it's about doing the right thing even when it's difficult and protecting the financial system from being used. For illegal activities, ultimately, it's about safeguarding our economies, our communities, and our future.
Well said. It's a reminder that we all have a role to play in this effort by understanding the risks.
We do.
Asking questions and reporting suspicious activity, we can each contribute to building a safer and more ethical financial system. And that concludes our deep dive into AML CFT. Asset due diligence. We hope you found it informative and insightful.
I hope so.
Remember, knowledge is power.
It is.
The more we understand about financial crime, the better equipped we are.
Absolutely.
To prevent it. Thanks for joining us.
Thank you.
Until next time, stay curious and stay vigilant.